Yeah, now we're talking. What a day. What a great day. Boy, one of those days you love being a trader. The bear trap was in. The squeeze takes off. Man, oh man, I know a lot of you guys made some pretty good money today. Make sure, remember, only as good as our next trading day. So let's buckle down here today. Get ready for a big non-farm Friday coming tomorrow. And if tomorrow is half as good as today was, be very happy going into the weekend. It's Thursday night. I have a lot we're going to cover in a very important video here tonight. Got a bunch of trades we're talking about for tomorrow. The big challenge we have for tomorrow is we all saw that big short squeeze here today, this afternoon. How do we trade after a big short squeeze? We don't want to chase it. These can be very delicate, sometimes very difficult situations to trade the following day, and we don't want to give back all the hard-earned profits that we got here today. So how do we trade short squeezes? We're going to cover that in the video here tonight. I have a lot of great trade setups I'm tracking for tomorrow, and I'm going to give you guys a great roadmap to trade this short squeeze that will use a game plan to make some money on Friday. Before we jump in and get the game going tonight, I'm getting excited just thinking about it here this evening. Before we jump in though, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy this stuff, as always, thank you for tuning in. If you enjoy these videos, hit that like button for me. Give me a shout out. Give me a holler in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, Joe. Let's get ready for Friday. Boy, tomorrow could be a very easy day, or it could be a really challenging, painful day. I'm going to make sure you guys have a game plan to make sure it's the easy type of Friday here for you tomorrow. Everything bullish right now, right? Everything bullish. Again, bear trap we talked about last night into a beautiful short squeeze going higher. These types of markets, they seem pretty easy to trade. The problem is, though, we've got some significant overhead resistance across really all three of these markets here tonight. We're going to go into more details here in a moment, but big move up into overhead resistance. There could be a lot of bull traps up here. I don't want you guys to fall for those and give back those gains before the week comes to end tomorrow. Now, before we jump in and talk about all the individual trades, how to trade the short squeeze for tomorrow, let's get all on the same page here for tomorrow, because tomorrow, it's not your average Friday. It's non-farm Friday, the first Friday of the month of June. I can't believe we're talking about the 1st of June here today. There are three things you want to keep in mind for tomorrow. First of all is the employment number situation. I would be careful trading around this number. Oftentimes, the market can be pretty quiet overnight before these numbers come out. I tend to give myself a little bit of a buffer, about 10 minutes, 15 minutes after these numbers come out, just because sometimes you get some pretty wild swings around them, right? So just be careful overnight. If we're not moving very well overnight, don't force it. Remember, trading is like riding a bicycle. It's easier when it's moving. Expect there to be the potential for a very violent, volatile reaction tomorrow morning. So think about 8:45, right? 9 o'clock, 9:15. Once the dust settles, we'll update the charts and go back after it here tomorrow. That's the first thing that you want to be aware of. The second thing is we're supposed to be hearing from the Senate tonight. A few hours ago, we heard from a couple of the members of the U.S. Senate. Apparently, they're going to try to push this debt ceiling bill through the Senate here tonight. That has been a kind of a wild card all week this week. Everyone sounds pretty optimistic and pretty confident that it will slide right through like it did the House last night. So we don't anticipate any issues on that, but who knows, right? That's definitely one variable, one wild card, one known unknown we are tracking for tomorrow. And the third thing that you want to keep an eye out for tomorrow is tomorrow's a Friday. My mindset on a Friday morning is always very simple. I want to get into trades as early as I can. And although I don't like adding new positions late in the morning, early afternoon, I do like to try to leave a runner on the trade into the end of the morning, into lunchtime, into the afternoon, because Fridays love to run. They get a bit lower volume, traders get a bit lazy on the discipline, and Fridays love to move. Now, we may not get that big move tomorrow after the big move that we saw today, but whenever I have a Friday morning, I'm always thinking, get in early, right? Put risk on early, not putting risk on late in the day because markets tend to get a bit low volume a bit illiquid. All right. So early in, leave a runner because we might get lucky tomorrow and get some low volume moves into the afternoon session. So employment number at 8:30. Careful around that number tomorrow. Will there be any hiccups? Any drama out of the Senate vote here tonight? Doesn't sound like it. We'll keep that an eye for tomorrow. And again, early in, right? Leave those runners on Friday. Let's get back to our charts though, because that's where the money is made, right? On the charts. Now, speaking of money, if you like making money, make sure you watch all the way to the end of this video tonight, because every trade I talk about can be applied to your favorite market. I will tie it all together tonight. So promise me this. Promise you're not going to click off here after I'm done with your favorite chart, because every trade I talk about on the S&P can be applied to the Nasdaq and vice versa. All right, let's get into it. S&P, Nasdaq, crude oil here for this evening. Real quickly, guys, these are tick charts. You can see tick charts in the upper left-hand corner. This is the 21 EMA. If you're watching here for the first time on this. Now, what's the most important factor that is kind of tipping us off to where the best trades are going to be here for tomorrow? Let's take a moment to zoom out here real quick and let's go to a 60-minute time frame. We did this last night. You guys seem to like this a lot last night, so let's keep it going here in the future. Now, if you watched last night's video, we talked about the fact that we had that very strong run up. And anytime we see a strong move in one direction, we expect a relatively deep pullback to let buyers buy low and then back to retest the high, right? This is basically what we call the objective, right? The buyers now are only inches, points, right, away from reaching the objective right now. The hard part right now is we're very bullish. There's no doubt about that. But does this look like a good place to be a buyer? Yeah, probably not, right? This is where anyone who watched last night's video are taking profit up here, right? The best place to be buying is down here with those bear traps that we talked about in last night's video. So we assume a lot of the pros, right, we're buying nice and low. We assume those pros are taking good chunks of profit off at the high. Not a very good place to be a buyer. So what do we do in situations like this? There really are two scenarios we want to be ready for. We know we don't want to buy high, right? So what we want to do is either buy low or wait for a breakout. In other words, I can look at some prior highs here and I can use those as key areas of support. So one way to do this is basically wait for a pullback, right? As we try to retest that high, as we try to punch through that high here right now, we may not get that follow through up here. There may not be enough buyers up here. We may have to get that pullback to attract more buyers in. That's one way I'm looking to trade this here for tomorrow. That's probably the most desirable way right now. Then the second way to do this is to basically look for a breakout, right? Get some proof the buyers are going through that high, and then start looking for pullbacks, right? Ultimately, we call breakout pullbacks. We can begin to use these prior areas of resistance. We can use them as support, right? We saw an example of that right there, right? We break out, we pull back and go. Now, there's a couple different ways we can trade this as it breaks out. We're going to talk about that tonight as well. All right, so the two key components right now is we either need to get a breakout and give us some more proof we want to go through this high, or we need to get a pullback to be able to allow buyers to buy at a decent price here right now, right, to avoid buying into that high. All right, so that's the overall kind of directional game plan. That's the higher picture or the higher time frame on the 60-minute. Now, back to our tick chart here now. I find that tick charts are much easier to trade off of. Let's clean this up a little bit here, right? Make it a bit easier here on us here for tonight. But basically, the idea is pretty simple, right? We either need to get that run going lower to buy nice and low, right? Or we've got to get this thing going higher and give us that proof, all right? Later on in the video, I'm going to talk about the breakout going higher. There's two very specific ways to trade the breakout going higher. The way that I hope we get tomorrow is I hope we can use this trading range. If you watch my videos, you know that we get a lot of range breakouts and pullbacks. right? They're called breakout pullbacks. This would probably be my favorite trade here for tomorrow. Now, we talk a lot about these in our free trading classes on the website, so many of you guys probably already know this one, but I would love to get that deep pullback. Now, again, we know why, because again, we've got all that overhead resistance up overhead. Now, if we're lucky, we'll get that nice deep pullback, and the sellers will confuse this for a reversal. Right? It's not a reversal yet, but if I can get the bears to come in and get them to try a couple times, right, around that movement. Remember, this area right there, the top of that trading range, is a great support area. We talked about this last night, right? So if I can get the bears to come in and just get trapped in underneath that moving average, what do we always say? Use those stops as fuel, right, and buy right into those stop losses, okay? These are called failure patterns. You guys are learning these, right, in our free trading course. This would be a 2-try failure because of the depth of that pullback. Now, one of my favorite follow-ups on this, if we go higher, is going to be called a trap setup, right? And these will come usually just a little bit below a prior swing. Okay, so again, my favorite trade for tomorrow is get that nice deep pullback. Hopefully we'll fool some of the sellers, right? And I think it's a reversal. Trap them into the failure pattern, blast their stops, right, with a failure, right? And then as it runs higher, what we do is we go out and we find, again, what we call trap setups, right? Trap patterns. And oftentimes, these will line up nicely off a high like this, off a channel like that. All right, guys, there are probably 100 examples of these, right, inside the free trading course, which reminds me, I know that most of you guys have taken the free classes. You've learned these failure into pullbacks, right, these failure to trap setups here. But if you're watching for the first time, if you haven't taken that free video series yet, I'll put a link up there for you in the upper right-hand corner. That way you know all these entry tactics. Grab that link, take that free trading course, because the strategy I teach in that short video series will show you a simple trick to know exactly where the best winning trades will be each day, and you'll learn 4 of my favorite entry patterns to help you make money on your own account. If you're missing the best trades each day, if you missed that beautiful squeeze today, definitely grab that free class link up top there and learn that roadmap. That way you'll know how to get deep pullbacks, trap the bears in, right, and then spit it right back up to retest the high. All right, so again, understanding that 60-minute, that's one scenario, right, for that deep pullback. Now, a couple things you want to be aware of. Sometimes we get that deep pullback. Sometimes we don't get the failure, right? Sometimes I would love a failure, right? Get those stops triggered and pop back up, right? Would love that one. But sometimes we don't get it. Sometimes there's so many buyers down here, the market simply V-bottoms off of that low. Okay, not the most desirable thing in the world, but you know what? We want to get ready for any possible scenario, right? So let's get ready for that too. If it V-bottoms off the low, it will usually do something like this. It'll V-bottom and begin to grind. Now these, it's all about being mentally prepared for these ahead of time. Because what happens is when you see that V-bottom and it pops right back up, that's when FOMO kicks in. Right? That's when that little voice in our head says, shoot, I missed a good entry down here. I better get in before we go back to retest the high. No. Don't buy high right now, right? You want to, remember, always want to buy low. You want to buy off support. What do we do in this situation? We draw a trend line off that high. We pin it down at that low. And we go out, look left, and prior swings. Okay, swings are where the money is on this type of V-bottom kind of jump off of that low. Again, not the ideal scenario, but if that's all we get, that's what we'll take. All right, where's the objective? The objective is to go back up and retest the high. All right, so again, if it V-bottoms off that low, begins to grind up, the grind is the giveaway. Draw that trend line off those highs, pin it down off that low, and do not miss that trap or that failure. Really, any of the entry patterns you guys are learning in the free trading course can be there as well. All right, guys? Now, at this point, maybe you're wondering, could I short this thing, right? Could I short this on the way down? Now, first of all, we're very bullish right now. So if you do choose to short, what I would do is use a half size, right? Use a quarter size position. One of the things I'm always kind of harping on my students in our trade room is go big on your best trades, right? Go big on your best trades. Shorting in a bull market like this right now, I'm not going to say you can't do it, but if you're going to do it, right, be smart about it, right? Let's not put the whole full size position on it. So with that said, with the disclaimer said, how do you sell in a bull market? Bull traps, basically. What's a bull trap look like? As we start going higher here, right, think about now as we go lower here, as we're trying to take out these lows down here, think about how you can sell as high as you can. So if you want to sell this thing right now, right, as it rolls lower, okay, that's where a bull trap would come in. Now, notice how I draw this. I get a lot of questions about this every week. We teach this in a lot of detail in that free trading course. But notice how I draw it, right? We have to go lower, see a lower low in price, okay? Lower low in price. That's what creates that swing high, and that's where traps live. Okay, so again, this is not well, you can do whatever you want, right? But if it was me doing it, right, it would be half size position, quarter size position, okay, on that move going lower. Okay, and then we may run into that low here. We may then trap in those bears, right? 1, 2, and right back up. We go from there. All right, guys? So keep an eye on that. Last thing, okay? Last thing, and then I want to talk about if we go higher here. What if we don't get that deep pullback at all? Remember, I'm the kind of guy that I like to go through different scenarios. Because we the markets are wild. I want to go through different scenarios. So we know the goal. The goal is to get that deep pullback. What if we don't, right? What if I get this channel drawn in here, right? It would not surprise me at all if we went back and retested that low and there were a lot of buyers right there and they jammed it, right, and ran higher. It's not the ideal scenario, but how would you trade something like that? Well, what would the challenge be? The problem would be I'm buying relatively high, right? It doesn't look very high on this chart, but again, when you look at where we are right now, you're buying pretty high, right? Unless you see a relatively deep pullback here, right? Okay, so if I don't want to buy high, what's the best entry pattern to avoid buying too high? You're probably yelling at the screen right now, it's a trap. It is. This is why traps are, and you'll learn this in the free trading course, this is why traps are my favorite of all the entry patterns because they're so useful. So if I want to buy a very shallow pullback right now, my concern is I don't want to buy very high. I want to buy as low as I can. And the way you do that is with a bear trap. Okay? Bear traps are essential when you're trying to buy as low as you can. Now again, look at the structure of this. Okay? Now remember, in this type of setup, what you're really trying to do here is you're trying to well, think about it. There probably aren't going to be a lot of big money buyers up there, right? They're waiting down here. So if we don't have those big money buyers to kind of give this thing a boost, we need to get something else that will offset that lack of volume coming in, right? And that's where sellers come in. We have to get the bears to try a couple times on this. That way we can use their pain, right? My first mentor, my first trading coach used to always say the easiest money you're going to make is when you're going with the trend and the guys or gals going against the trend are in pain, right? This is the exact scenario where you leverage that pain, right? Pain equals profits usually, okay? So now again, look at this. So bears come in, they try once. Remember, sellers want to sell high. They try once, go higher, make them try again. Okay, then to buy as low as you can, you want that trap entry right there. Okay, these are the ways you buy relatively high when you're in a bull market. All right, and make sure you understand the difference between a bull trap and a bear trap. And obviously, we'll be in our trade room, so we'll do all this stuff together every morning at the opening bell. Right, so just gonna be aware of that. All right, those are the scenarios I'm watching for if we go lower. Now, what if we go higher here? All right, there are 3 different kind of components that you want to be aware of if we go higher. All right, let's keep going. S&P looks great. How about some Nasdaq? Okay, Nasdaq is in a very similar situation. Go to the 60-minute chart. Right on the 60-minute, big strong move up. Anytime we see a strong move, what do we expect? A pullback. And what? And a retest of the high. Nothing is different here than the S&P, right? We are definitely bullish. There's no doubt about that in my mind. However, we are uncomfortably high right now. So do we see a deep pullback? And again, coming in off some levels of prior areas of resistance. We talked about that a moment ago on the S&P. Or do we see a breakout, right? And again, when you think about breakouts, we have to see that proof, right? That proof that we want to keep going through the high. Because for all I know right now, we might run up, retest this high, and crash right back off that high, right? Again, you would think that all the buyers who bought on the pullback, they're taking their profit there. And there might be a lot of sellers waiting up there to short that thing back down in. We'll talk about that here in a moment there as well. All right, so now let's go back to the main chart here now, and let's think about this now. Okay, so now we know how to trade the pullback. Okay, now we know how to trade the shallow pullback. Now we know how to short this thing, right, going lower. All right, now let's get serious here about if we go higher here. The challenge we have going higher is we need to get, well, we don't want to buy high. So there's really three scenarios you want to be thinking about, and then we'll talk about the short, okay, how to short off the high here. First of all, a lot of times these squeezes, the following day, they just keep on ripping. Right, we saw one last week, right? I believe it was, right? Last week, where it squeezed, just kept on going and going and going. So one scenario is, and this again for the S&P as well, if we pop up and we begin to grind and grind and grind and we keep on squeezing, going higher, doesn't seem likely, but you better be prepared for it. On the way going higher, what's my concern? My concern is I'm buying very high. How do we resolve that concern? We buy traps, right? This is the way you buy it if we start to see this thing squeeze and run higher. Okay? Look back here. Look back here. One of these patterns. Do you see it right there? Right? We run up, shallow pullback, higher high. It should come at no surprise that everybody wants that level right there, right? That is a bear trap, okay, right? Bears try once, bears try twice, buyers trying to buy as low as they can. That's the pain trade I was talking about earlier, okay? So if we keep squeezing overnight, if we keep squeezing running higher here, again, doesn't seem likely, but who knows, right? Who knows, right? We're not in the prediction business. We're in the game plan and trade the game plan business, right? Strong run up, shallow pullback, higher high in price. That's where, right? This is where the traps come in, right? On the way higher. Okay. Now on a trade like this, if it was me, right, I'll go half size, right? Quarter size, relatively small size because you're buying relatively high, right? There's a greater chance in these scenarios for a deeper correction. Okay, and that brings me now to the second position, or the second, the second potential. Okay, and this is where we have to kind of see what happens here right now. A lot of times, what happens is if the market goes higher, right, it'll pop up, and we'll start making these larger channels, right? These larger channels. See I'm doing that, right? So think about this: trap patterns, right? Trap setups as we go higher. Okay, so as we go higher, we're trying to get in off traps on the way higher, but then eventually, what happens is we start getting too high up. Right, we start getting way, way high up now, and now we don't want to buy too high. This is where the 21 moving average, this yellow line, comes into play. Okay, what happens is the 21 EMA will come up here as well. Now we want to see a pullback and get underneath that 21 EMA. This is where the magic happens. I talked about this earlier on the S&P, if you recall. Remember that earlier? We go lower, we trap them in below the moving average, right, and buy it back up again. This is a very similar situation, very similar setup here. Okay, now remember, if we see this thing rip and run higher, if it races higher here now, that will be another strong move. What did we say earlier about strong moves? Anytime we see a strong move, we expect a pullback and a retest of that high. Okay, it's one of the highest percentage things we get in a trending environment. So if we see this thing push and kind of blitz right through those big highs up there, okay, we don't want to buy high, but we expect a pullback and a retest of that high. Okay, draw the channel off the highs. Get in the habit of drawing bull channels off the highs. Pin them now down the lows, and then wait for the pullback. Okay, the pullback will almost always get below that 21 moving average, and this is where I still don't know why people still fall for this trap, but it's something that I did when I was a rookie, and it happens all the time, and I'm glad they do because it's a very easy way to make money in the markets, is with all that bullish momentum now, and the goal to go back to retest the high, remember, very difficult to pick the bottoms on these, right? Sometimes they bounce here, sometimes they go here. It's tough to tell the bottom, right? What you do though is you wait for the bears to come in and sell off that moving average. Once they do that, bingo. Now you've got the pain trade, right? Now you've got their stops where you want them. Again, it can be very difficult to tell how far that pullback will go, right? Make it easy on yourself. Don't just try to pick the bottom or predict the bottom. Wait for the bears to come in and go, okay, if you're going to go lower, good for you. If you fail, though, I'm going to buy right into your pain and get that snap back up, okay? So think of this like a breakout pullback. Okay? It's basically what it is. Right? It's basically a breakout pullback. Now, there are some variations to this, okay? Sometimes what happens is it'll pop and begin to grind, right? That floater, that grind, we talked about this earlier. What you want to do in these situations is draw a trend line off those highs, bring it down to that low, right? And then go out and swing, right? Get underneath prior swings. That's where trap patterns live. Get underneath the moving average, right? That's where failures and the pain trade lives. And again, we're trying to go back up and retest the high. Okay. Now remember, inside of this move going higher, we may get that pop up, right? And that bear trap I mentioned at the beginning, right? So these types of setups are built into that initial kind of leg going higher. All right. I know it's a bit confusing, but as we go up, right? Looking for those traps. As we go, if it begins to grind off, we start finding those bigger channels and we wait for that deeper pullback. And again, I know I'm scribbling on the chart right now, right? But get underneath the moving average, right? That's where traps are. That's where failure patterns are. Makes sense? I know. Sorry, it's such a scribbly up there. But on the way up, it's the bear trap. And then once we start getting way, way high up, okay, back off, right? Let people take some profit up there. And when it pulls back, though, bam, right? Don't miss that channel, because now we're going to probably see that retest of that high. All right, guys? All right. One final thing I want to talk about here going higher is a trading range. Okay? If at any point tomorrow we start seeing a range up here, okay, that will be a gift to the buyers. Okay, at any point tomorrow, we start seeing a range up here. Remember, tomorrow's non-farm Friday. Very likely we get some sort of range at some point right here tomorrow. Now, I don't know where it's going to be, right? It could be here, it could be here, it could be way up. I don't know, all right? But once we see a trading range, okay, the job is really, really easy. Find levels of support below the range, wait for a pullback to support, right? And go out and look for a seller failure pattern off of that low, all right? Now, there are lots of different ways to find support. Things like expanding triangles, things like pendulum swings. You'll learn those in the free trading course, right? When it comes to ranges. You'll learn a lot about ranges. You'll learn why. I love ranges, right? I think they're the easiest markets to trade. But if we start going sideways here, okay, all you got to do is find support levels, okay, swing levels, trend lines, like triangle lines, megaphone lines, pendulum swings. Sometimes we'll go up and come back. That becomes a pendulum off the high. That could be support, right? The amount above the range, below the range. Once you find support levels, then it's a matter of waiting for that pullback, right? And then trapping those bears in and going back up into that trading range, okay? So we're going to keep an eye out for a range there tomorrow. I just don't know where it's going to be yet, all right? And then last thing, how would I sell off the high? Strong move. They're trying to retest that high, right? How would I short this? Well, first of all, again, half size, quarter size. What you have to do up here to short something like this is because momentum is so bullish, you have to get the buyers trapped and use their stops to turn this thing around, right? So just like that deep pullback, we trap the bears in and go higher, right? Same idea here. Now again, warning, right? Warning. These are a lot more, they're a lot less reliable, right? So if we do retest the high and we see those buyers coming in once, buyers coming in twice, think about now where their pain is. They're going to want to go back and take out that low right there, the deepest part of that pullback. Okay, just be aware of that, right? That is the objective. Okay, but if we start seeing these buyers foolishly, as you guys know, none of the game plan we've talked about tonight says to buy the high, right? We're not buying high, either waiting for a deep pullback to buy or waiting for proof of a breakout to then buy the pullback from there. So if we see rookies start to get trapped with these highs, now we look for what's called a crown reversal pattern. Okay, crown reversal patterns are nothing more than two tried buyers, right, with a trap high. That's all that is. Okay, when you're trying to trade against the trend like this, again, remember, lower percentage trade. That means either skip it or half size, quarter size, one contract, right? Very, very small size. These are not the trades you should be building your career on. Okay, these are the trades you add into your trading plan when you've already got a good level of confidence in the with trend trades. All right, I'm off my soapbox. That's my warning, right? So be careful on these. But these are the ones, though, as we retest the high, mission accomplished. Now the buyers come in. Remember, buyers want to buy low. They buy once, they buy twice, and their stops are sitting right there. These can usually be pretty easy pickings if you get a good setup on them, right back to those lows. Right? And then remember, once we get back to those lows now, be careful because now the bears get trapped in. It's an overall bull market. Bam. And that could create that trading range, right? That could create that range up there, right? Buyers get at the highs, right? Bears get trapped in the lows. Notice how we're using two tries, right, to rope in those buyers, right? Full size position going with the trend, half size position, quarter size position, right, going against the trend, right? That's the way you build a long-term profitable career, right? Making sure you filter or understand the power of momentum. All right, boy, NASDAQ looking good. I'm excited for tomorrow now. Want to wrap things with oil. I know a bit late in the video right now, so thank you so much for sticking around all the way to the end. Oil, very, very similar to what we talked about on the NASDAQ and the Emini. We mentioned last night, this is my 60-minute chart. We mentioned last night that oil is probably the most difficult market that we can trade right now. We had a very strong bear move down, if you recall, on the oil the last couple days. But like we talked about last night, right? We have this kind of key area of support down here with a big range up overhead. That is ultimately what I believe was responsible for that squeeze that we saw here this afternoon or this morning. We talked about this last night. Right? We said I don't think anybody would be surprised if we make our way back up into that 72, right, 72.5 area, into that trading range. All right? So looking like these buyers now want to make our way back up into that big range overhead. But where are we? We're running right into overhead resistance. Shocker, right? Just like we have the problem on the S&P and the NASDAQ. So this game plan is very, very familiar. This will sound very familiar here, right? I would love to buy nice and low. I would love to use this prior range for that breakout pullback. Nothing different there, right? Trap those bears in, let them try a couple times, grab that failure, grab that pullback, and back to retest the high, right? Or do we see, a V bottom, right? V bottom pops up. Find that channel, right? Grab those. First test is the best test, right? First test off the low of that channel, right? That's a pretty easy one. Again, don't chase those, okay? Don't chase those. Also, too, if we go sideways up here, remember this from earlier on the NASDAQ? If we go sideways, what do we do in a sideways bullish range like this? We find levels of support. And what do? We wait for a pullback into support. We let those poor rookies who don't watch my videos get trapped in below the 21 moving average, and we buy right into their pain, right? The pain trade back up into that trading range. Pretty easy, right? If we go higher, right? There's that big range overhead. If we go ripping higher, right? How do you buy as we rip higher? With traps, right? So if we do end up ripping higher here and the market races higher, we don't want to buy high. We want to buy low. We do that by buying with traps. Okay, again, half size position, quarter size position. Then what do? Once we get way up, we don't want to buy high anymore now. Now we go out, find bigger channels, draw off the highs, off those lows. Watch that moving average, right? Deep pull back in, find prior swings. This is where the bigger money trades are, right there, right? So again, as we go higher, shallow pullbacks, traps, right? Traps, right? We keep on pumping higher. Okay, back off, let people take profit. And then again, find those larger channels and then don't miss that first test. Okay, that deep pullback off the high on a faster time frame will feel like a reversal. It's not a reversal in most cases. Hopefully, though, the bears will think it's a reversal, get trapped underneath that 21 moving average, and we can pop, right? Squeeze those bears out and go back up to retest the high. Do you see this dance that we play? You see this dance, right? This is the way the markets work, right? We go with momentum. We want to buy as low as we can, right? When things get overbought, when things get too high up, right? And remember, we're not using an indicator for it, right? When things get overbought, we wait for deep pullbacks. When deep pullbacks happen, bears get fooled, inexperienced traders get fooled, and professionals are waiting to make them pay, right? To teach them that lesson, right? That apparently they haven't learned yet. This dance, learn this dance, and we always say, right? Trading is not easy money, right? It takes a while to learn this stuff. But once you learn it, and once you're going to learn this little tango, the dance we're doing here, it can be pretty easy and pretty fun to trade each day. All right, guys, that's the game plan here for tomorrow on oil. Again, all the stuff we talk about in the S&P and Nasdaq can pretty much be applied to the oil here as well. All right, guys, great job tonight. Hope you enjoyed the video lesson. Like I said earlier, I'm excited for tomorrow. Remember, early in, leave those runners. And don't forget, guys, we get together every morning and we trade this stuff together. I would love to have you there trading right along with us. It's a great place to learn this stuff and trade along with me. 8 o'clock Eastern time tomorrow morning, every morning. I'll put all the membership links, all the free video class links. I'll put all that stuff in the description of the YouTube video. If you got any questions, call me. I'm always here. The easiest way to reach us is to pick up the phone, give us a call. We're a small business, right? So we're easy to reach here. Call us. Use live chat if you guys have any questions. I'm here to help out if you guys need help along the way. All right, guys. Now get out of here. Enjoy the rest of your evening. The big question is, who's going to win the NBA Finals? I have to say I'm rooting for Miami, right? Because they beat my Celtics, unfortunately, in Game 7. Boy, wasn't that disappointment for the Celtics a couple days ago? Anyways, who you got? Who you got in Game 7? Let me know in the comment section below. I always enjoy watching some finals on TV. So have a great evening tonight. Get some rest. I will see you hopefully soon in the morning trade room, and we'll come back here, not tomorrow night, we'll come back here next week, and we'll do it all again for a big second week of the month of June. Guys, as always, thank you so much for watching. Thank you for sticking around all the way to the end. My name is Joseph. Be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.